Pre-construction condo flippers are left holding the bag as the market turns down. Yeah, we've talked about this before, but I'm gonna give you an in-depth analysis on top of what this article is talking about to give you an idea of what the heck is gonna be happening in the next few years with all these people who bought pre-constructions thinking they're gonna assign it, make a ton of money, but now they can't even assign it at all. And that's exactly what we've been going through. Now, if you are looking for some help in how to navigate this market, or you're kind of caught in the situation similar to what we're talking about this video, and you kind of want to chat about what options you have, you can book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate at RE/MAX in the Greater Toronto area, on top of making sweet, wicked real estate content just like this one for you. And this headline is great for the week. Let me read it to you. Pre-construction condo flippers may be left holding the bag as buyers disappear. Bravo, bravo. Great headline. Now, this may come as a shock for people who may not be in the industry, right? But this was always kind of, I would say, the biggest systemic risk that we have in the market. And I've been talking about this even before we were talking about trigger rates in summer. Because when you buy something in the pre-construction side, that's way higher than the resale, unless the market is going to be aggressively appreciating to that price point. When that time comes, if we don't hit those price points, there's a lot of kind of effects that could have on the market and, a lot of issues. And that's exactly what we're going through. So this is not new to me, but if this is the first time you're hearing about it, yeah, you're gonna be in for a shock. And I'm gonna also go through some numbers at the end of this video that I made and a chart to give you an idea of if you are holding one of these condos, kind of where you stand and are you gonna be left holding the bag depending on how the market goes, right? So let's go to the article here. The first little part that I wanna highlight to you is nervous investors looking to offload their pre-construction condos in the secondary market may find themselves out of luck. Industry Watcher says as softening real estate market and rising interest rates send the buyers to the sidelines. So in the last, I would say since 2016, so 5-6 years, there was a lot of people who were able to buy pre-construction at 5% down. And then we had this massive run up in pre-con prices. And then they were able to sell it for a few $100,000 profit. And, as word gets out, people want to do this. And there was a lot of people who are buying for the sake of flipping. Now, whenever someone has reached out to me when we were still doing a lot of pre-con in 2017, 2018, kind of when it still made sense, I was like, look, you shouldn't be planning to assign this to make money. You have to have the ability to close it because on the off chance you can't assign it, you're left, as the article says, holding the bag. And we don't ever want to put our clients in those situations, right? But unfortunately, those people who don't go through us, there's a lot of people out there that says, hey, buy this and I'll sell it for you later and I'll make you a ton of money. And there's a systemic issue at hand, right? Because I know a lot of people are talking about the CBC mortgage fraud stuff. To get a pre-construction, most of the time as a buyer, you need a mortgage approval letter. And that stuff is even easier to make up. And the banks who force the builders to make sure the buyers have this don't necessarily do the underwriting to check on it, right? So there's a lot of people who sell a lot of pre-construction, and in their email blast, you'll see that it says free mortgage approvals. And that's basically what that means too, right? So is this a big systemic issue on top of the prices being really high? Absolutely. And that's kind of what I'm going to go through today, right? And when all the buyers disappear and there's no one buying these assignments, then these guys who bought this with non-realistic way of closing this, yeah, it could lead to some issues. The real question is we don't know how many there are. And then the last thing in this article I want to point out to you is builders who are far too invested are moving forward, but many of those buildings who are selling at $1,500 a square foot is going to be in a lot of trouble because the resale market's at $1,100 a foot. And you don't count inflation on construction, development costs, taxes, and the value of land. That also changes depending on where you're buying in the city, right? So even though the value in which people are willing to pay for something is coming down, the cost of building these things haven't come down. So that's kind of where we're going to have the market butt heads on top of kind of the people who can't close, right? But if you found any of this content useful or you thought other people may also benefit from knowing about what's going on in the market, make sure you share this with them and help me spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. And if you are looking for some help, you can book a call with me using the link right here. It's www.chatwithzen.com. So I made this little chart here to kind of run through what examples were in the pre-con sales cycle, right? So you can see over here, I basically kind of highlighted the years in which pre-cons were sold. So as far as I know, there's some projects that are sold in 2016 that still haven't finished for certain reasons. But right now we're receiving a bulk of the stuff that's sold in 2017 and 2018 in the pre-con space, right? So what you can see here is if you bought in 2017, right, it was roughly in the downtown core. We're talking strictly about like 1 bedrooms, just, to average everything out so that for the sake of comparison, it's a lot easier. You're paying about like $1,000 a foot, give or take, right? And now I would say in that market, even the article says it's 1,100, I would say in downtown, in a brand new building that's comparable, not under rent control, similar finishes, your 1 bedrooms are still around like 490 to 510 square feet. You're looking at like $1,200 a foot on a decent deal, right? So that means your equity position between what you bought it for and what it's worth right now is about $200 a foot, or the difference right now is about $100,000 in profit, right? Because if you bought for $500,000 on a 500 square feet unit, it's worth, say, $1,200 a foot right now. That's $600,000. You're at a $100,000 equity position. So the real question comes down to, what do you do with it, right? So if you were to assign it, and I said, yeah, you can definitely do it and you'll still make money, right? So assigning it, someone would charge you anywhere between like 3 to 5%, right? So 3 to 5% of 600 grand, let's just call it after assignment costs and all that stuff and lawyers, you're left with like $60,000 before capital gains tax or business income tax, depending on how you structure it, right? So yes, there's some money to be made, call it like, 60 grand or so before taxes, but that's a 5-year period in which you've held this thing. It's a really crappy return, right? Now, if you have the ability to close on it, right? So how I did the math for these cash flows is if you bought it for $500,000, right? You're going to need a mortgage of $400,000, and you, assuming you can get it at a mortgage at the current interest rate right now, 5% interest rate, 30-year amortization based on the current rental rates and like your average condo fees and taxes, your cash flow negative $213, right? So when I kind of advise a lot of our clients who still have some 2017 condos that are closing, I'm like, look, if you want to get out, you could. You're not going to make much money because you've held this thing for like, 4 to 5 years, right? You make like 60 grand over that period. If I do my math, it's like $12,000 a year, which is not that great because you put down like, 20%, which is 100 grand. So that's like 10% a year. Sounds good, but on the real estate side, it's not that great before taxes. Whereas I'm like, look, why don't you just close this thing? You can get a mortgage and we'll rent it out for you. It's not under rent control. $213 is your cash flow negative, even at 5%. So even you do a 5-year or 3-year fixed, you can survive the short term and then you can sell it later and it makes more sense. So the people in 2017, cool, you're good, right? So let's move to 2018, right? So now they increased the price by, $100 a foot. Some stuff actually sold for like $1,200, depending on, was it before or after the development charges doubled, right? So they're in a $100 a foot equity position, or basically they bought it for $550. There's $50,000 profit. So if you sign it, yeah, it's possible, right? You may just break even, you get out of it, or you basically close on this thing and you're at $430 negative cash flow, which is fine, right? So in the 2018, it's fine. Now, keep in mind, some people have bought for more and some people bought for less, right? So that's why I'm just using this on average on like your 40-story tower in downtown condos, right? Now, here's where things get kind of sticky, right? So in 2019, it started the detaches were coming back. 2019, the condos were just kind of like still chopping sideways, right? So the prices are still going up. So you're at $1,200 a foot. That means right now it's on par for what you bought or what it's worth right now. And if you were to assign it, you'd be losing money, whatever the commissions are. So call it like 4%, right? But then you'll get out of the contract, or depending on your finances, if you can get a mortgage, right? Then your cash flow negative $650 a month, which is not the worst thing given that we've seen like minus $1,000 a month because you did buy in 2018, right? But the thing is, when you get to this point right now, right? Like, well, do you want to carry the negative $600 something a month if your primary residence has gone up and your HELOC has gone up, right? So if you put down $120,000 to buy this place, right? Based on HELOC, your HELOC rates are prime plus 1. So they're gonna be like 7% on 100 grand. So that's like $7,000 a year. Divide that by 12, that puts it like, I don't know, another $700 a month, right? Just on the interest for the HELOC. So you're like minus 1,200. So that's kind of when you get to the point where like, you know what, do I take the loss for the commission and I get rid of this and then call it a day? And yeah, you may be able to find somebody because if you sell it for less than what you bought it for, some people may be interested, right? Because like in the areas of which people are willing to buy a pre-con right now, it's probably something that I bought in 2017, 2018, 2019 where you're buying for less than what the resale is, right? Now, here's where things get really tricky. If you start buying things during COVID, like after the pandemic, you're at like easily $1,400 a foot in downtown. So there's a specific building I'm referencing that sold at that time. And you're in minus $200 a foot equity negative position. You're like $100,000 loss on what it's worth right now. But here's the thing. You may not be closing until 2022, 2024, give or take, depending on the size of the building. So if it's a 40-story tower, the stuff that's sold in 2020 probably isn't closing for another year or two, right? So are you going to be coming down the gun with saying, hey, I need to sell this because occupancy is coming? No. But the real question is like, do you want to ride it out? And do you see that things getting better in the next, call it like 18 months? And just from all the people I'm talking to right now, again, like I told you before, they're quite optimistic of where it's going to be. Do I think they're going to get there? I have no idea, because it's the short to midterm that no one has any idea what's going to happen, because there's so much crazy things happening in the economy right now, right? But let's say you were to close this in like a year or two at the current rates, you're like minus $1,000 a month, which doesn't make any sense, right? And then when you get to 2021, you got $1,500 and $1,600 for 2022 and this year. And look, some people are like down $200,000. So this gets the article where like, well, if I bought it last year, or maybe even in 2021, I may have only paid like 5 or 10% of the deposit so far. Do I want to continue and not pay the deposit and just let the builder sue me? Some people are talking about that. Some people just want to get out of the contract, right? And a lot of people who are trying to basically assign here, right? They're just not going to have any luck, because they're basically trying to sell it for more than what the resale is worth. Even if they, take a hit on the commission, no one's going to really buy it. So that's kind of the systemic issue that we're going to see in the next, call it 3 to 4 years on pre-con. Because for a lot of people who bought in 2020 all the way to 2022, for you to even break even, kind of like some of the people here, and I know it's getting a little bit messy here, but to get break even here in 2019, like some of these people, you need to see the market go up quite a bit, right? Think about it. You need to go from $600,000 to $800,000. That's basically a 25% appreciation in, call it 4 years. If I do my math correctly, that's like 6% a year. Can we see it? Probably if we start right now, but if the market continues to trend down for another year or two before what a lot of people are praying for, like a Fed pivot, right? That means you're gonna have to do like 12% a year. Is that gonna happen? I don't think so. Realistically, no, right? Because that's like breaking every standard in the last 40 years plus times 2, right? So then the question becomes, what is the systemic issue? Because if you have a lot of people in these positions, how are you going to have to close, right? You're basically going to have to come up with whatever your negative equity position is, right? And you're going to have negative cash flow. And this is why I said, as investment for pre-construction, it hasn't made any sense in the last 3 years, right? Unless you are moving or buying a project that did make sense, right? Or you're coming down with a lot more cash. So a lot of people who, just did minimum down, or they borrow from the house to do this, they're going to be in a really rough position right now. And that's kind of why, if they already understand this and they're trying to get rid of it, but the problem is no one's trying to buy these things right now. So the only thing they can realistically do is hope and pray that the market gets better. And I would say that hope is not on their side. Like the market's probably not on their side for the timeline they have. And here's the worst part of all of this, right? It's the low rise side. Like, now that you kind of understand my thinking on the condos, let me talk to you about where I think we're going to start seeing the risk first, which is the pre-construction on the low rise side, meaning like your towns, your singles, your detached, and your semis. So if, for an example, right, you bought something in 2020, I'm just going to use the price per foot example, right? Obviously, when you're talking about a house, it's like 3,000 square feet or so, right? So say you bought something, in 2020, and you are negative $200,000 in equity position, right? The problem is you don't have like 3 to 5 years for this to close, right? Like at this period, 2026. What happens is generally you have 18 months to close, right? So when you're 18 months, you're like, call it, mid 2023. But what happens is the market has come down like 20%. You've bought at a 20% premium on pre-con. So now you could be like underwater 30, 40%. So you have to come up with that large equity position, or you're assigning it. And that's why right now, when I see the assignment market, there's a lot of people who are trying to offload a lot of these homes that are coming due on occupancy very soon or closing, and they're just not having any luck. So they're going to be stuck in a serious problem. And I saw this in 2017. That's why I warned a lot of people in 2018 and 2019, like, look, you got to be careful what you buy for low rise, because you don't have the 5 years working on your side. At the very least with condos, that's what they have. But with low rise, you're like 18 months in. So in the next, call it 12 months or so into next year, we could see a lot of problems happen in the pre-construction space like we saw in 2017. If you bought at the absolute peak, the market's come down, the market hasn't rebalanced back up. We're going to probably start seeing a lot of builders provide like vendor take back, provide a second form of mortgage. There might be a lot of litigation because a lot of these houses are built already, right? So there's gonna be a lot of issues that kind of flow through. I know in York region, when we saw that run up in 2017, there was basically an entire neighborhood that came in under appraisal, and that whole value of the properties were less than even like the surrounding subdivision just because they were purchased at a higher price. So we're gonna see a lot of these issues come through in the next little bit, and that's kind of where I think we're gonna have a lot of problems. Now, when you flip it to the condo side, imagine if you have an entire condo in the next, call it 2-3 years, under appraised. Now, obviously, some don't want to get sued. They'll be able to close and they come up with the deposits, right? But what if a lot of people who can't close? What if the people who were planning to assign these things, right? Maybe they have 3 or 4 of them. And it could leave a lot of these condo buildings in weird situations, right? Because as a builder, if your buyers don't close, right, you could sue them for the damages once you sell it for a little bit less than what it is, right? So they can set the floor, right? It would just be a little bit of a tougher time and litigation for the builders. But at the end of the day, they're going to recoup their costs. It's the buyers that are going to be screwed over. And how many of them there are right now? Nobody knows. Do I think it's going to be systemic enough that's going to cause a huge ripple effect? I actually don't know. Like if I had to put a number on it, I would say maybe like 10-20% of the people in like certain bigger buildings may have bought for flipping, but I'm sure some of them will come off the closing, right? So maybe like 10% of the units could be at risk given the things I talked about in this video. But I guess only time will tell, right? So if you are kind of trying to be predatory or trying to buy something at a deal, you want to basically find the people who can't close in 2017, 2018, and maybe they just want to get rid of it because they can't carry the negative here, and you can just pick up the time that which they've held it for, which is 5 years, right? That's kind of where some value is. And because we're in such an uncertain market, even if you give it to them at par, some people may not want to take it because it just doesn't make sense. They keep thinking prices are going to go down, right? So that's kind of why a lot of people who bought for the sole purpose of just flipping it is going to be left holding the bag. And you know what? I think this is probably good so that we stop having so many issues in the pre-con space because it isn't governed enough in the way it's sell and the kind of the assignments and these like mortgage qualifications. This could be good for the system, but it's going to be a painful process for anyone who's kind of in the real estate condo investing market right now. Anyways, hope this gives you an idea. It's a little bit longer than what I thought, but I want to kind of share with you this chart on kind of how I look at every single numbers and see what the risk is and kind of when it's going to come up, right? Because this kind of dictates how the condo market's going to do in the coming future years, right? Anyways, if you are looking for some help on how to navigate this, or this kind of strikes a chord with you because you're in this position, you can book a call with me to kind of strategize what options you have using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.